Hi, this is Zach here from Zach's Traders Cafe. We'll look at some major markets on Monday, the 25th of July. Starting off with the FTSE 100, and you can see here that even though we've slowed down as far as upward progress is concerned, FTSE could still hit 6,900 at the top of this possible rising wedge formation, which can be drawn in from the beginning of June. Stop loss on the buy argument at the moment, really back below the initial 66.12. July resistance, but even that looks unlikely, and the 6,900 target could be hit as soon as the next 1 to 2 weeks. RSI at 66, which is still not overbought, which is something which is actually quite incredible given how far we are from the lows of last month. Onto the DAX, and a bit of consolidation here, but still very bullish indeed. Still there's the gap there to fill from earlier in July. Good consolidation either side of the 200-day moving average at 10,072, and really while there's no end-of-day close back below that figure, we would be looking for a top of range 10,400 target over the next 2 to 4 weeks. If you're cautious on this market, maybe you'd wait for an end-of-day close back above the peak of last week, which was 10,195. Onto the US markets, and obviously this is the lead on everything over here as well. Support here at for the Dow at 18,474, with the target still 18,800, which has been in place for quite some time at this March rising trend resistance line. At this stage, we'd only really go bearish of this market if there was a break back below that old April peak at 18,167, something which seems at the moment to be very unlikely indeed, especially as we're hearing the phrase helicopter money more and more frequently. Onto the S&P. Again, it's the 10-day moving average which is guiding us. While there's no end-of-day close back below that at 2161, we're looking for a 2220 target, which is the March resistance line projection. The stop loss on the whole bull argument at this stage would be really back below the former 2120 June peak, which also ties in with where the 20-day moving average is at the moment. For the Nasdaq, it's been the same old pattern for quite some time. We gapped through effectively resistance line from the autumn of last year, and once we did that, really the target here was up towards 47.20.40, which was resistance in the autumn. That goes back to that 47.37 initial November peak, and that could be hit as soon as the next 2 to 4 weeks, especially while there's no end-of-day close back below the 10-day moving average at 46.07. Onto the currencies, and cable still in a rather dangerous looking consolidation pattern. It was between the 10 and 20-day moving averages. Now the sell trigger really 130.65, which was the low intraday low of last week, and that's could then take this market down towards the 128 area, which was the initial floor for July. Otherwise, at this stage, we're probably selling into strength up to the 10-day moving average at 131.91 on an intraday basis. Onto the euro, and this is the market which may be of the most interest over the next few sessions. Looks as though it's readying itself for a new leg to the downside. Initial support here 109.11, and that's the initial target for the bears. Breaking that could unleash quite a strong move to the downside, perhaps down towards the this 106 area, which would be along the lines of that April support line projection I've just drawn. Stop loss at this stage on the bear argument back above the 200-day moving average at 110.78. Onto dollar yen, and here still maintaining the recent firm action. 107.50 hit at 107.49 hit at this initial 2000, well, in fact it was the December resistance line from last year, and that's temporarily stopped this market, but one would expect that to be retested at the minimum over the course of this week, and then after that possibly give this market enough momentum to go back towards 110 to 111, which was the late May resistance. The reason for saying that is that even after all the gains, the RSI is only at 56, which suggests that we're already halfway through the recent recovery for this market. On to gold, which still remains rather dull as far as its price action. It would appear that it needs to go back down towards this the floor of this rising trend channel from the autumn of last year at 1288, which is the 50-day moving average and the likely support zone. That bear argument is valid while there's no end of day close back above the 20-day moving average at 1336. That's it from me. More updates at the same time tomorrow.